For the next segment, please welcome to the stage Senior Advisor at the Milken Institute, Karen Kornbluh, and the panel on incentivizing investment in innovative, critical, and emerging technologies.
Everyone have their coffee? Oh, you're not going to need it because this is such a great panel. For those of you who aren't looking at your program, this is Incentivizing Investment in Innovative, Critical, and Emerging Technologies. As you all know, decision makers around the world are intent on leading in the development of critical and emerging technologies, but to do so, they need to create innovation ecosystems that are attractive to investors. This panel will examine how can the U.S. and other markets around the world best de-risk and incentivize investment in clean and critical technologies. Our short panel consists of 4 experts who can really get into this. We have Doug Arendt, Executive Director of the NREL Foundation, if I pronounced that correctly? Okay, good. And Editor-in-Chief of Renewable Energy Focus. Jennifer Hankins, Managing Director, Tulsa Innovation Labs. Jigar Shah, Senior Fellow, World Resources Institute, who most recently served as Director of the Loan Programs at the Office of the U.S. Department of Energy, and Maggie Switek, Senior Director, Research, Milken Institute. So we're just going to get right into it. Doug, I want to start with you. At this time of enormous disruption, how can investment in clean energy best be incentivized?
Yeah, broad question. Could go in lots of different places. So let me start by interpreting it. It's not about actually money. So the incentive, as one uses that conversation in DC, typically talks about tax incentives or R&D incentives, et cetera. I think we need to go in a different direction and think differently. So there are 2 points I want to make after reflecting on this for a long period of time and watching the innovation ecosystem move relatively slowly, actually too slowly. The first is, and we'll get some examples of these from my colleagues, to really think differently about partnerships, particularly in an era which we have not experienced in 50 years of power demand growth and demand growth for molecules, where if we're going to work linearly, we work too slowly. And now we're seeing emerging examples of new and what I call unconventional and maybe a bit uncomfortable partnerships. So between, for example, the mega scalers or the AI companies and utilities, or the AI companies and actually developers for clean energy or clean electricity in particular. Those are an example of unconventional partnerships, but I could come up with dozens more that we should talk about. And we really need to pursue those as leaders of thinking about how do we pull groups of companies together to work simultaneously to bring advances forward. There's another really good example, which is what's happening in what's called the First Movers Coalition. Was in a great dialogue with them in Davos, where you've got a group of companies from across tens of sectors who are not just thinking about committing to the market signal of I want new, bigger supply, generally clean energy, but they want to work on partnerships about how do you build the demand for that, and how do you build the supply chains. That's one key thing. The second key thing is that on the innovation ecosystems, and we'll talk about this again some more, we need to compress the innovation ecosystem from what has traditionally been an incredibly slow linear process, from invention to IP to small grants to maybe friends and family to maybe early VCs to later VCs to strategic partners, et cetera, et cetera. And generally with hard tech, that takes decades. Soft tech is faster. How do we pull that together? How do we leverage assets, both knowledge and physical assets, to compress that into maybe 3 to 5 years for hard tech? NREL, the National Renewable Energy Lab, where I used to work and retired from, has an incredible suite of programs that do that. Some of the other national labs do, but we need to, again, think about how can we leverage both knowledge and physical assets to do it much, much faster in a set of unconventional partnerships.
Jennifer, you're nodding. Can you make this real for us in terms of what regions and localities can do to implement some of the things that Doug was just talking about and other things,
Absolutely. So I'm the economic developer on the panel. I'm not an industry expert, but one thing I do know really well is our region. And in our region, our two core industries are aerospace and energy, both going through enormous shifts right now, technologically, as it relates to the talent that they need to continue to drive their companies forward and continue to innovate. And then most importantly, just our community growing so fast. And how do you kind of grapple with all of these interesting dynamics and disruptions all at once? He touched on it perfectly. For us, it's really about, one, how do we get an innovation ecosystem built as quickly as possible? One, so that we can maintain and continue to grow and enjoy the benefits of two juggernaut industries that really prop up our region and our state, but also to make sure that the technologies that are coming out of our great universities and all of these beautiful assets that he alluded to are driving real market value. And so for us, it's been a couple of things. We've generated a lot of momentum recently to get investments into those core, I see building blocks here on the screen in front of me. I like using that analogy, the core building blocks to our innovation economy. But then secondarily, working very brass tacks with the corporates themselves and the industries and the industry juggernauts kind of going through those major transformations. One example, we're proud to be able to have an unconventional partnership that he alluded to within institutes like NREL for our venture studio program that we have with juggernauts such as ONEOK, Williams, Devon, Microsoft, and other major industry players who are actually investing locally to drive innovation for them globally. And I think that's kind of the interesting tension we're facing now, is that you are relying on localities to really up their game, as he was also talking about. How do you actually continue to drive these technologies and innovations from local sources to meet enormous global demands going forward? And that's no small task, especially my city, Tulsa. We're an MSA of about 1 million people. But we've got to do it. We have enormous assets that we can't allow to go unused, enormous amounts of talent, capital and infrastructure that can be used for this next year of technological innovation. It's all about how do we bring those partnerships to bear in a place to give us that scale on a global level that we're really focused on right now.
So Jigger, take us to the federal level. You were just doling out a lot of money to de-risk incentives in the energy transition. And now there's been a shift in federal priorities. How do you think about that? Or do you think there's going to be a retrenchment from some of the priorities that you were focused on? Do you see a shift to a different kind of de-risking?
Yeah, I think as Doug said, this is a multi-decade problem, right? The Department of Energy has been the world leader in innovating things for 40 plus years, and the United States has been terrible at actually commercializing any of those technologies, right? And so for many of those investors who do that work, their first phone call after they've proven their technology is to a foreign country and say, we would love to scale up our technology there. And that's true for advanced grid technologies, or nuclear, right? All of our nuclear designs have been scaled up in China, right? Or solar panels or battery storage or whatever, right? We invented LFP batteries, lithium-ion batteries, et cetera. So now, for a 4-year period of time, we decided that we were going to try to do it here. And that level of conversation and that level of commitment mattered, right? And we got about $100 billion or so of private sector capital crowded in, right? Because they had to choose the winners and losers, and then we provided tax credits or loans or grants or whatever it was to match their ambition. Some of those projects are under construction and they're moving forward. Others of those projects are still waiting to close on their equity. And we'll see, right? I mean, this level of commitment has to be shown over and over and over again. And if it's not, then I think people on the equity side lose money first, right? So it's difficult for them to move forward confidently if they're not sure the federal government really wants them to do things here in this country.
Great, Maggie, take us globally. Tell us about, we want this panel, as you suggested, as you were coming on, this is broader than clean tech. We just want to talk about critical and emerging technology generally. Where do you see some examples internationally where they've really figured out how to bring these different pieces that we're talking about together?
Well, first of all, let me start with saying I don't know that anybody has fully figured it out, but if we look at just the investment into emerging spaces and technology, and if we just focus on the emerging and developing economies, really all of the investment has been going into China, India, Brazil, a few countries, and a few smaller countries in Asia. And just to put some numbers into it, like out of the 15 billion that was invested of the private investment to emerging spaces and technology in 2024, about 10 billion went to China, and then another like 15%, 2 billion to India, and then about 5% of that went to Latin America. So just setting China aside, because that's a different case, but focusing on India and looking at a couple of things that they have done well, and that generally India and Brazil coincide on, we have seen that their financial markets have been really well established. So India, for example, has two of the biggest stock exchanges in the world, the National Stock Exchange of India and the Bombay Stock Exchange. They have had considerable investment, just talking about emerging spaces and technology, not just in clean energy, which yes, but also into precisely AI, as we were talking about before, and into the financial system. So NFTs, banking as a service, decentralized finance. And so that is one area, and that also coincides with what has been happening in Brazil. Now, another aspect that really matters in those countries is the regulatory aspect, right? So we need to have stability to some extent, but when we talk about regulation, we always talk, or when we talk about the role of the government, we always talk about the incentives, but there's also another cost. There's the incentives, but there's also the costs, right? So lowering the costs, making sure that at the same time the processes of insolvency, recovery, and resolution are in place so that when investors come in, their rights are protected. So we see that those are aspects in which those countries have been doing relatively to other emerging and developing countries relatively well. And finally, there's also the role for the government. So for example, digital public infrastructure is very important. Mexico is one of the countries actually with the strongest the government access to internet. So, and the internet services provided by the government, it's about on par. It's like when we do the ranking in the world, it's ranks number 14. US, for comparison, is number 9. So it's close to that. So we see that there is a role for the government to really establish the infrastructure in developing countries so that then the investors, private investments from abroad can come and do business inside those countries.
Great. I'd love to just turn to the panel and have you talk about what are some of the obstacles to the kind of work that you were talking about, the bringing in unconventional partnerships, whether nationally or at the local level, and the derisking. Like, what are the big obstacles, and what do we do about them? Doug, why don't I start with you again?
First, or you switch up the order?
No, I'm going to start with you again. Yeah. You're on the spot.
Oh, thanks. Let me think about it in a couple different ways. So I was actually, just while Maggie was talking, thinking about practical examples that happen in the innovation ecosystem acceleration space that NREL has been involved in for nearly a decade, maybe a decade longer. The first is to find capability, both knowledge and physical assets that I talked about before. The second is to frankly pull together the unconventional partnerships of interested parties from across the supply chains, if I use that, or across the market readiness levels or TRL levels as you want to think about them, and then put a sponsor in place. So one of the key programs that has been really, really successful is a program called Innovation Incubator. It's actually funded by a bank, Wells Fargo. There are more than 70 companies that have gone through those as cohorts. They are chosen from channel partners like Tulsa and across the whole country, 60 of them, plus some international. Of those 70 companies, 99.9% of them are still up, running, and expanding, and they've garnered more than $2 billion in follow-on funding. And relative to the cohort that didn't get chosen but were applicants, that's about a 20-to-1 ratio, which is just incredible when one thinks about de-risking the technologies and accelerating them to get to the marketplace where either a follow-on investor or a strategic partner wants to invest in them. Now that we have conversations thinking internationally about how do we take that example practice and not replicate it, but adapt it to India, to India's ecosystem, or adapt it to Southeast Asia with a very different focus, which is not about inventing technologies, but about bringing licensing or joint ventures with those technologies and those companies to bear. And so again, there are different recipes, if I can use that term, for compressing the innovation and getting technologies to market faster, depending upon where, and it also depends upon the obstacles, right? The obstacle in India is not lack of talent. It's not lack of market, and it's not lack of finance. It's actually lack of coordination. So I think about it as it's a great musical that's happening that doesn't have a conductor. And if you had a conductor, it actually might sound good. And so if you play music, you'll think about that one.
I'm going to skip over to Jigger for a second because you were, in a way, a bit of a conductor in your past job. And I'm wondering, and I've heard you say that 90% of what's coming onto the grid now is as a result of some of that work, clean energy. But where do you see the obstacles going forward to this work continuing?
Well, you know, it's interesting when you think about the last 8 years. There's a few things that have occurred. One is that, you know, President Trump went to Angela Merkel in Germany and said, hey, you're really at risk of bringing all your natural gas into Germany from Russia. You should diversify that. Well, obviously the Ukraine conflict has occurred. That diversification is occurring. I think, you know, we've scaled up oil and gas, you know, production here in the United States, but 90% of what we add to the grid is clean today. And when you look at the tariffs that we're working on today, a lot of that stuff's imported, right? And so we are actually in a very fragile place right now, right? Because our natural gas plants are imported. A lot of our parts for the auto industry are imported, right? All of these things are imported. And so a lot of what we tried to do was to onshore and reshore a lot of those supply chains here in the United States. Today, I think we'll make almost all of the modules that we use in the United States will be finished here in the United States through module companies. Now we have to like vertically integrate cell manufacturing and ingot and, you know, silicon manufacturing. But we're starting to do that. The same thing's true with battery manufacturing. So almost all of the EV batteries will be made here in the United States by 2027. And we're starting to do that for utility scale batteries as well. But it's an interesting thing that we have. And one of the challenges that I see is that we have all the best technologies in the world. So taking lithium-ion batteries, where I think there's a lot of people who mistakenly think China has good technology. The two big breakthroughs that are coming out on both the anode and the cathode side are all here in the United States, right? If they're ready to go by 2027, 2028, which is what I expect, and we don't have a thriving battery manufacturing industry here, we will license that technology to China, right? Because you can't say to those people, now that you've perfected your technology, we are going to make you go out of business, right? So they will license their technology to someone else, right? So we either will have a thriving battery manufacturing facility here, we will then implement those technologies on top of that thriving battery manufacturing ecosystem and then leapfrog our competitors globally, or we will give them our technology basically for free, right? And that is happening across nuclear, across enhanced geothermal, across all of these other sectors. And that's why the conducting mattered so much at the federal level. I think that what Jennifer and others are doing is extraordinary, what Doug's doing. It's amazing work. But the problem is that when you are at this level of innovation, right, you need the 10,000 engineers, scientists, and experts at the national laboratories to validate between all the different, you know, sort of claims that are being made by all the different companies, right? You need all of that expertise because that expertise cannot be paid for by the state and local governments. It just can't be, right? So there has to be that partnership. And without that coordination, you can't crowd in the $100 billion plus that we crowded in over the last 4 years. It's almost impossible to do.
Jennifer, why don't you jump in and tell us how it's working from Tulsa's point of view? Yeah.
Absolutely. You know, all of this, and especially being and getting to listen to all of these kinds of conversations, our problem is speed, right? You know, you've now heard it from both sides of the coin. And for us, one way we are trying to get around that, you know, again, at the local level of like, you know, we could never build our own national lab, you know, like the 10,000 workers. And so how do we think about building those partnerships to add scale to what we are good at on the ground level for us? So, you know, really simply, you know, everyone across the community is building entrepreneurial ecosystems, right? And a lot of those efforts are usually hyper local. For us, we knew that, one, that wouldn't meet the demands of our core founding partners in our energy innovation program is called Rose Rock Bridge and Rose Rock, EIC Rose Rock, which both the energy corporates themselves invest in directly into the fund and then also invest in our venture studio. And our job is to go out and find them the technologies aligned to their core innovation needs for the next 5 years. So we are white gloving, going to the best universities across the country, going to national labs where we can, of course, partner with NREL and others and say, hey, your technology is really great. Technology knows no geographic bounds. We know that. We're not blind to it in Tulsa. But how can we bring that on with our corporate partners, utilize the scale they have in their existing markets, and pilot these technologies to get them, one, validated sooner, quicker, hopefully, and we've seen some of that. You were talking about geothermal companies. It is interesting to me, you have midstream oil and gas companies and the largest driller in the world in Helmerich and Payne now interested in geothermal technology. Well, I don't think we would have thought of that if we hadn't brought those corporate partners together to kind of iron out the value chain and interesting things that they're all working at. We get to sit in a really cool position where some energy companies in our model are saying to the other guy at the end of, in maybe the downstream application, saying, why aren't you interested in that technology? And then we get to see this exchange of, well, that's a good question. You know, why should I be interested in that technology, Mr. Midstream Oil and Gas Company? And you're starting to see these connections across the value chain, and we're seeing it real time in Tulsa. The challenge is, of course, these technologies, you know, we kind of focus on like that higher TRL level, 5s and 6s. That's still not a commercialized, internationally globally scalable technology yet. And so we are kind of grappling with, okay, we've got the early stage, the pilots, the corporates at the table, the giants to be able to deploy these technologies, but we are still kind of missing, you know, that next level. And that's where I think we're going to see a lot of tension, frankly, especially with the corporate community you kind of mentioned, the investment needed from governments and international players as well. So that's kind of one thing we're sifting through is like, okay, now what? You know, we've done all these things really well. To your point, this model is working so well for us and creating that market value. We're looking at how do you adapt it, certainly not replicate it into aerospace. You know, our other core areas, autonomous systems, specifically drone technology. So how do you think about this for that next big industry going through transformation as well?
Great. And Meg, you had started to talk about obstacles when you talked about digital infrastructure. What other obstacles are countries facing, and how are they overcoming them?
Well, the obstacles will really be very specific to each country, right? So if we think about Mexico, of course, the security issues that the country is facing are a large obstacle there. When we think about the regulatory systems, again, like the protection of the investors' rights are well protected in those countries, but then if we look at it from the other perspective of the costs of doing business, those are still high. So, you know, so there's that definitely. And then there's also other side of regulation. So if we think about, for example, the energy systems, and in Mexico, for example, most of the investment in renewable energy is coming from foreign investment, from foreign investors. But the problem there is, or I don't know if the problem, but the situation is that it's all really coordinated by the CFE, by their kind of government structure that is in charge of the energy production and distribution in the country. So it's really about making sure that it's open enough to the international players, to the foreign players, while at the same time, of course, protecting the security of the country in a way that, you know, that would not create additional risk for their communities.
Great. I wanted to get into the grid a little bit and energy as sort of a bottleneck to further innovation. So how critical technology can help improve that situation, but also how what's happening with the grid can enable innovation. And maybe I'll work this way, and Jigar, maybe you can start talking about that, however you like.
Well, I mean, I think that we're in an unprecedented time, right? Where the GDP of the United States is actually reliant on how much electricity capacity we can actually add to the grid, right? That capacity requires a few things, right? One is it requires cultural change, right? So there's lots of things that you can do that are very low cost, like virtual power plants or grid enhancing technologies to add more capacity. But it's things that people culturally didn't want to do. They view them as things that, you know, their mentor didn't teach them how to do. And they're like, well, we don't do things that our mentor didn't teach us how to do. So those are things that we have to figure out because we have an affordability crisis today. And I think a lot of people are looking for low cost solutions. I think the second challenge you have is that you're in a place where you've got 2,000 megawatts worth of capacity ready to be added to the grid, mostly in the form of batteries, but then also natural gas, et cetera. Solar and wind are not really capacity. It would be the actual batteries that are the capacity. But there's a safety study that has to be done to get onto the grid. Today with AI tools, et cetera, you can do that analysis in 4 minutes, even though a lot of people take 2 years to do that analysis, right? Now, the question again is, what's the cultural sort of acceptability of doing something in a much more efficient fashion than paying Siemens or GE like 30,000 hours worth of man time to do that work, right? I don't know. We'll see, right? But MISO is doing that now in the Midwest because they are literally going to have rolling blackouts soon if they don't solve this problem, right? And so that's occurring. The next piece is permitting, right? And so when you look at regulations and permitting, a lot of people like to focus on NEPA. Fine, it's fun, it's 4 letters, but it's not just NEPA, right? You have the Fish and Wildlife Service, you have the historical preservation work, you have the Army Corps of Engineers, all of which who have parallel processes that work under NEPA. But when you decide to get rid of NEPA, those other processes don't go away, right? And so figuring out how you bring that orchestration, I guess, as you suggested in the last question, to actually figure out how to get rid of all of those things is the third part. And then the fourth part, which I think people forget, is that you actually need an investor who wants to take the long-term risk on energy, right? Energy assets pay off in 10 years, 20 years, 30 years, right? And so the question really becomes today when the forward gas price curve is trading above $5 a million BTU in 2026, do you want to go all in on natural gas? That's how every utility CEO lost their job from 2005 to 2008. Right, was natural gas price volatility. Those people actually have memories to when their mentors got fired. Is that exactly what you want to do right now, is to triple down on natural gas capacity? And so one of the big challenges that we have right now is that people are just assuming that they know what the capital markets wants to fund because it's American strength or whatever it is that people are using these days. And so part of the challenge I see is that our GDP is held hostage to solving these issues, right? And so we know how to grow our wealth in the United States, but making sure we have sufficient infrastructure and electricity and innovation plays into that, right? And all 4 of the things that we just talked about. So it'll be a fascinating thing, but I think that piece of it is something that needs to be orchestrated.
And how are you seeing that, Jennifer, in your area in Tulsa?
Yeah, I mean, the big thing is most folks know Oklahoma, you think oil and gas. Yeah. Not true. We are an energy state. We are energy companies, and I think the companies that we are dealing with more and more call themselves energy companies more than they would say I'm an oil or a gas company or a driller or whatever it may be. So that's really exciting. I think like you said, it's a really curious time, for us and a lot of our partners. They are trying to figure out, how do you not... Our next cohort that they're focused on is decarbonizing data, all the different ways that all of these new technologies, if you will, are taxing the grid at different points. And how do you innovate within that and still maintain fidelity to core business models? So it is definitely an interesting and wild time to be alive, and I certainly don't think some of the conversations I'm hearing happening even locally wouldn't be happening without some of these pressure points. So it's also just a really cool, like he said, the conversations happening are really impressive and curious.
So Doug, with AI taxing the grid as much as it is, and all of these companies from Microsoft to Meta and the rest looking to become energy companies. I mean, what do you see happening with the grid?
Yeah, it's a really interesting dynamic. So I think I've been in 100+ conversations about AI and energy in the last year. And I think we have to stand back from the fluff of the conversation or the flurry of the conversation and ask, what are really the attributes that the AI companies are looking for? And what is the characteristic of those big, bulky units? So they tend to be localized right now, but not necessarily. They tend to be bulky, as I said. So hundreds of megawatts to gigawatts to be built out. And so there may be a couple different pieces. One is those companies see now that energy is a critical supply or a critical asset that's necessary for their core business. Core business doesn't run without energy. So they've leaned in and are leaning in very heavily. You've got Microsoft with commitments to nuclear. You've got Meta with commitments to gas. You've got others with commitments to geothermal or nuclear or broader portfolios of technologies because they want secure, reliable, affordable power, and they're willing to lean in on technology innovation and push the markets to do that for themselves because they're seeing that, in fact, goes back to your question of what are barriers, that the market's not responding well enough, fast enough, et cetera. So that brings us back to the point of unconventional partnerships. Some of those unconventional conversations are, how do those companies, i.e. the big data players, actually work with regulators and utilities to come up with alternative financing models to build, own, and transfer those energy assets and not burden every single customer because they're the growth customer. And that's a really creative space of, again, unconventional conversations, which likely should propagate across many, many jurisdictions in the United States as well. The other key thing that I'll bring in is that what's really required in order to do what China's done, for example, in their clean energy space, or even Texas, or perhaps California, is, and Brazil as an example, is really good planning, but translating the planning actually into implementation programs and procurement programs with clear rules. And if that process doesn't actually follow its normal course of action in an accelerated way as fast as possible, then things go chaotic. And what you get is the stasis of, for example, investment in the grid in the United States, where we really don't build much, or it takes 15 or 20 years to build a new grid line because there's not the rigor of the process and clarity of going through. Texas is another example, Maggie can talk about that, or Brazil, where there's actually clarity of planning. The planning led to transmission corridors being invested in, led to investors who had clarity of returns, and that led to new generation coming online.
Okay, great. So we're going to get the hook in a minute. So I want to give everybody a chance to wrap up. And just, you know, we're at the beginning of a new administration. There's a lot of disruption in the world. Maybe just tell us like the one or two things that you would really, let's make it one thing you would really focus on if you had a magic wand to really unlock some innovation. And Maggie, why don't we start with you?
Well, I would just go back to what Doug was saying now about the case of Texas and doing it well. And really, it's about regulation, about making sure that it's not getting in the way. That when it comes to making changes to the grid, for example, that the ability to make the changes necessary is there, so that it doesn't take forever with permitting processes and things of that type.
Okay, I'm going to mix it up. Jennifer, why don't you?
Unconventional partnerships. Think creatively about where you go to solve solutions, where you invest the capital, and who's really the gold standard of driving those kinds of things in places.
Doug, what's one thing?
Tactical. Go meet 5 new people here who you've not met before and ask how you can do business together.
Yeah.
All right, there you go. Jigger.
I just like to know who's in charge. Who's orchestrating? That would be great.
Well, I think anyone on this panel, I'd be happy to have orchestrating. Thank you so much for all your contributions in the past and all you've shared with us today. Thank you.
Thanks, Karen.